How do banks create money? When considering how banks work, some people think banks make money by simply having the Treasury print off more bills when they run out of supply. Additionally, some people confuse the process that banks go through when they're actually creating money with the ways that a bank earns a profit. While banks and money are intertwined, that doesn't mean the bank has access to a consistent source of cash on hand. A great deal of a bank's money does not take the form of physical banknotes or bills. Banks have to create money through a multitude of revenue streams so that they can remain in business and provide their clients with the funds that they're keeping safe. Single bank money creation. Money can be created through a single bank location. This is done by accepting deposits and creating loans for consumers. It is important to note that a bank cannot loan all of its money out at once. Banks need to hold a percentage back to supply people with physical cash when they make withdrawals. This cash is known as required reserves. In the United States, banks are required to maintain 10% of their account balance as their required reserves. Say a bank has a balance of $5 million in deposits and this money is not being lent out to customers. The bank is simply storing money for investors, not paying them out in interest or turning a profit either. By offering loans, the bank now has an asset. Effects of how banks make money. When banks make money, there are certain effects on consumers, both good and bad, including 1. High-interest savings accounts. When the bank has more people opening savings accounts and investing their money, the bank shares in some of the profit by providing high interest rates. This is common with online and mobile banking, as they don't have a physical location to pay for. 2. Access to funds. The more money banks are able to create, the more funds they're able to lend out to consumers. There's a careful balance that must be struck, though, as too much money can have drastic economic effects. Banks might lend more than the economy can afford to pay back, causing major economic problems. Thanks for watching our video. Learn more about this topic, fiscaltiger.com.